I would like to call to the stage Jessica, Roy, Derek, and Ken. An applause for James, please. Great. I think before we start with a list of questions, it would be good for each of them to introduce what you're doing in the space. What will you be launching the next few months, maybe?
What's up, everybody? I am Derek Bandy. Some of you guys may know me. I've been trading for 7 years now. I teach, I do YouTube, obviously Instagram. But right now, like really what I'm working on, I'm trying to be part of a hedge fund to take it to like the next level. That's actually super close to being done, and I'm super excited about it. But it's taken a lot of discipline to get to this point. But yeah, that's me.
So my name is Jessica Lane. I've been trading, I would say, for about 7-8 years. I started in 2018. And really, I mean, again, Forex just changed my life. I trade, I mentor, I have a baby, a brand new baby I would say adapting to now my new perspective as trading as a mom is an entirely different experience than just me trading as myself, being like the individual grinder, like, oh, gotta get this money type bill, right? Ultimately, that's me.
Hey guys, my name's Ken. Hope we're all well and lit. In terms of background myself, I've been in the market since I was 18. So I came into, well, initially before that, I was a T-boy. So I was a T-boy, let's say T-boy turned trader. So I worked on a trade floor, like an actual prop firm. So I was getting traders their lunches, their breakfasts, their dinners, all of that, and sort of worked my way up. Got an opportunity to become an analyst. So my approach to the market is fundamentals. That's my baby. So I came in as an analyst, digesting everything, you know, from Forex, fixed income, commodities, stocks, cryptocurrency. So understanding all the workings of the assets that you're trading, like what's influencing them, why is the price driving higher or lower, all of that. So I did that for many years, and then I went into Forex broking, just looking after companies, doing millions of dollars in foreign exchange, just helping them manage their risk. And then I had enough of the corporate world. So like many of you guys, you might be in your jobs, you may be in a corporate world, and you may be, some of you, not all of you, you maybe get to a stage where you've just had enough. I had enough. I felt like I was trapped within a cage. I know what I wanted to do. I was confident in my ability, and that was to go and trade. So I took the leap eventually and got out of that world because I was quite down. And since then, I've been trading. So I've been a full-time trader since 2016.
Ladies and gentlemen, my name is Roy Dunya. I'm a full-time day trader and host of the FXSummit conference.
My name is James Storm. Some of you guys know me, some of you don't. I'm from New York, 26 years old. Started trading in 2017. Actually found out about Forex. I went to Dunkin' Donuts and I met somebody behind the counter, pulled out his phone. He's like, hey, you gotta check out this guy, whatever, you know, and I'm just like, okay, sure, like, why not, you know, and I followed him and saw the profits, you know, just got immersed in the space and was very intrigued. You know, I knew about cryptocurrency, like, when I was in, like, middle school. I started dabbling in crypto. Trading changed my life, you know. One person that I met, like, completely changed the entire trajectory of my whole life. I was, you know, just a regular guy. Like, I didn't go to college. I always knew college was not for me. You know, it's a great tool if you want to utilize it, but it's not the only one. Yeah, it's been a long journey. Trading is like climbing Mount Everest, you know, that has no peak. There's no ceiling, there's no limitations. It's only the limitations that are inside of your head. And it's also one of the most difficult things you're ever gonna have to embark on if you decide to really go down this journey. So obviously all of you here, you know, you all made arrangements to come here. You spent your time, you're obviously serious about this. You got to take it very, very seriously. You know, it can be detrimental. You know, like to your life. You know, if you really, I've seen a lot of success stories, but you also don't really hear about a lot of the bad stories as well. So, because this is not a very high success rate in this niche, you know, but there's a reason for it. So I'm not going to take too long, but I've seen a lot of ups and downs. I've lost everything I had multiple times. I made my first $100,000. I lost it all a week later. I was broke in the pandemic. Literally in 2020, I had $0 to my name, you know? And then the following year, I became a millionaire straight up off the market. So do with that what you will. What my journey, my experience doesn't necessarily apply to you. A lot of people, comparison is the thief of joy. So focus on your own journey, your own steps. You know, if you're not looking at your own feet, what happens? You look at someone else that's ahead of you. You're gonna, like I said, you're climbing Mount Everest. You're gonna fall, you're gonna scrape your knees, you're gonna break your legs. So just, focus on your own journey. But yeah, I love trading. It's the greatest sport in the world. It's also one of the most difficult. Like, you're dealing with, trillion-dollar hedge funds and institutions, and it's not easy to succeed. So you have to really be on top of your shit.
My name is Michela. I have worked in both markets, let's say FX and crypto trading. I've been more than 5 years in institutional trading. I could define myself more as an institutional trader than retail myself. I started my career in central banking in the Central Bank of Venezuela. Then I was hired by Citibank as a risk analyst for 2 years. I was working there directly with fixed income. Then I passed to crypto. For 2 years, I've been working in the crypto space, which is something I wouldn't look back at too. Like, I'm very proud of joining the crypto space. Back to corporation now, former Huobi Global. And yeah, that's pretty much me. Spent my life in CFI, probably exploring maybe decentralized finance in a few years to come. But let's start this panel because the first question is pretty much one of the most asked questions around. I tried to compile questions that I know that you will need an answer to. And the first is going to be, in 2022 and 2023, we, of course, lived very, very hard times economically. And as a trader, it was really, really hard. It was hard to understand how to trade with so many economic factors around. So my questions for you will be, can you share some recommendations for successfully navigating the market turbulence that we saw in 2022 and 2023? And how do you adapt your trading approach to the rapidly changing conditions of both markets, let's say FX and crypto?
Not marrying your trades and really just understanding the structure that you're in. I think a lot of people have strategies as they approach the market. I think it's very, very, very important. More than understanding the strategy is understanding the structure of the market. If you just approach the market like, I'm going to enter the market when the SMA crossed the EMA or when this goes to this level or whatever case may be, you're going to get knocked out every single time because it's the consistency of understanding your structure. What time frame am I trading on? Where am I in the market at this particular time? And really understanding, like, at that point in time, what kind of, like, we all have to identify what kind of trader are we, right? So are you a scalper, an intraday trader, a swing trader, so forth and so on. But as the market conditions change, how are you adapting? Are you going to enter a trade and literally let it go 100, 120 pips in profit and completely reverse back into your entry, or are you going to take profits and then adjust as the market is flowing? So really just understanding where you are in the market is key and essential.
For me, I think it's really key that everybody in this room knows what's going on in the markets, okay? So, during times of, for example, COVID, times of unfortunate war, shit like this that's moving the markets, there's an opportunity for all of us, as long as we are aware of what's going on, there's an opportunity for us to capitalize on that and make money. Any asset that you're trading, whether it's gold or a pair, euro, dollar, type that into Google News, okay? And Google News, there's a lot of, before, talking years ago when I first started off, everything was so overcomplicated, it used to piss me off. Bloomberg, CNBC, all of these guys overcomplicating it for us. The retail guys, but for whatever reason, okay? But now that information is so accessible and obtainable and very easily digestible for you to then be able to capitalize on that. So a good example for you, at the moment, I'm sure you're all feeling the squeeze of inflation. Inflation's a nasty beast. They've been talking about inflation in terms of the prices rising of goods and services. They've been talking about this since the last year, right? Now, for those that don't know, if we give you an example, gold, okay? Gold is a precious metal, is a commodity. It's seen as a hedge against inflation. It's a safe haven, right? People will buy into gold to hedge against prices of goods and services rising, against currency erosion. When you've got your money in the bank, it's essentially eroding, as price of goods and services is going up. So anyway, my point is, if you're aware of inflation rising, it being a theme, it being spoken about last year, if you bring up your gold charts, anyone that's got gold up now, or got their laptop up, check November 2022, okay? This is when really, really all the press, everyone was talking about inflation rising. We were watching the data, US reporting CPI rising, UK rising, Eurozone rising. And what was happening to gold? Gold was rallying. Now, there was a tone that was set there, okay? There's a theme of rising inflation. So we've got our fundamental theme driving gold higher. Now, this is where the technicals come in. Anytime we pull back, we buy on that dip. And that's exactly what was happening with gold And still to this day, it's pulling back a little bit right now, but it remains very much elevated. We went from sort of 1,600 up towards that 2K mark. It's really important that you just stay aware of the fundamentals of the assets that you're trading. So yeah, don't get left behind.
That was so good. I really hope you guys were taking notes. Yep. Good stuff. Actually, I would have to second that. A lot of people are not aware of market cycles. And so when you start to understand, like Ken was explaining, that there's a certain theme in the markets. For example, if the Federal Reserve is taking money out of the system and you're seeing demand for the dollar get higher and the dollar is rising, you can rest assured that as long as that tone stays the same from the Fed and they're going to continue to pull money out of the system, that the trend is going to remain. So you don't have to show up every single month guessing if the trend's going to magically reverse at a level. You can rest assured that as long as the tone and as long as that market narrative is the same, is going to continue to drive price. What's kept me out of trouble, and this is something that took me years to learn because I'm a very stubborn person, is to be very strict with the system that you're using, but be flexible with the execution. Being strict with the system means you have to know exactly what you're looking for. You have to predetermine entries and exits, not leave it up to discretion. Being flexible means it's not going to look like the way you thought it's going to look. You're waiting for a head and shoulders and you have an idea in your mind of what that might look like, and it doesn't exactly look like that. You have to be flexible enough to understand that there are multiple ways that the market can present an opportunity. So strict in the strategy, so you know exactly what you're looking for, but flexible in the execution because the market never looks the same twice.
How many people here have a general understanding of macroeconomics? Raise your hand. About half of you. That's a problem. That's half the battle. You're not even fighting on, you're fighting on one front. You don't even know what's going on the other front, So like what they both said, I always say technicals are the hows, how the market moved, and fundamentals are the whys, right? So think of it like the ocean, right? Like every time there's a big fundamental event, think of like a whale jumping out of the water and splashing the ocean, right? All that water is gonna flow somewhere, right? Like Ken said, you have different sentiments. You have risk on, risk off, right? When you're in a risk on scenario, investors have appetite for risk. That's when things like stocks and cryptos, flow well. When you have risk off, that's what you could have: a natural disaster, a war, political unrest, all kinds of things like that. So you have to understand these things. You have to understand the environments. There's so many things to adapt to. You have to, you really have to know yourself. You have to know your strategy. You have to know that it might not play out like exactly how, like Roy said, it's not going to go how you expected, and the markets behave in different seasons. There's seasonal tendencies, right? Go look at GBP USD. Like, it's very bullish. The month of September is bullish almost every year for GBP USD. Like, there's just things that you have to know. I mean, you don't have to know, but you should know these things. So it's really important to just stay up to date. I can't stress enough like how much of an edge and just your overall bias will improve when you understand what's going on in the news. Inflation, interest rates, Federal Reserve, all these things are so important, and understanding and interpreting them in your own way, because the way me and Roy, we both understand, that's the beauty of the market, is that there's two sides to it always. We understand, but we also have differing opinions about how it's going to go down, but you always have to be confident about it as well, and part of it is just listening to yourself, because there's always somebody with an opinion in the markets. So, and
I don't want to interrupt, but you can have two different opinions about where the markets are going and still both be right.
That's the beauty of it.
And that's the part that we all need to kind of need to get past. Everyone thinks it's absolute. So someone might take a trade. You have another guy in the group chat saying, "Oh, I'm in a short," when you're in a long.
Right.
It might have you second guessing. Maybe yours is a scalp and theirs is a swing position.
Right.
You could both be right. So understanding exactly what your system is will kind of help you differentiate that.
Without a doubt. I mean, it's happened to us before. We're both, it happened with me and Jason with QB Stu the other day, right? I was in a trade on USD JPY, and I closed my position. He was in buys, I was in sells. We both made money. So just listen to yourself. That's it, that's really it.
I wanted to add to that really quick. So this is a perfect example of like having an edge, but also being flexible. So I've actually been in a silver long due to like a higher time frame trendline retest. But the trendline was essentially a little bit discretionary. So I actually got in some drawdown, kind of was waiting for the overall trendline retest to hit, but I held it, and I held drawdown due to the fact that there was multiple retests that could happen at different levels. So that's like me playing. I always tell my students, like, I act like I'm a detective in the market. So when I'm looking at things, I'm looking for the market to give me clues. So I'm not going to close my entries if that retest hasn't been broke yet. Now, if it breaks the retest, then, that's a different scenario where I have to kind of fumble around and figure out what I'm going to do. More than likely, I'm going to close my positions. But at the end of the day, also that goes along with that is like I'm way under risk. So I can hold that drawdown until it hits that retest. And right now I'm sitting fat in profit because of what the market told me it was going to do. So, that's just, I think playing detective in the market, and it's almost like common sense. Like if the market's got a trend line retest, wait to see if that breaks. And if it doesn't break, it's more than likely going to probably make a new high or at least go to the next area of resistance or support.
My next question goes to Ken and to Roy specifically. And I would like to guess that from your minds. And I think that many of you are asking right now, how do you combine the two? How do you strike a balance between the two, right? Fundamentals and technicals. So for Roy and Ken, do I know that both of them to strike the perfect balance? What is your recommendation there?
First things first is just as an analogy for you, right? Most of you probably drive a car. In your car, you know the core components of that. You have your steering wheel, you have your brake, your clutch, your flappy gear paddles, whatever car you drive. You have faith, you know the inner workings of that car. Same way is with your asset that you're trading, as I explained earlier, you must know the inner workings of the asset that you're trading, otherwise you're trading blind. So it's very important that you just understand, just have a basic, I'm not asking you to be a chief economist, I'm just asking you to do what I said earlier and just type it into Google and just understand what's going on with that. In terms of striking a balance, as I said before, it's just understanding the theme, and then with your fundamentals, you need your technicals. Otherwise, how are you going to enter? You'll be entering blind. That's why analysts cannot trade for shit. These guys wouldn't know how to enter the market because they don't know technicals. So you need to know the theme, have an understanding there, but then get in through your technicals. Have your rules, your number of confluences. For me, I'm always looking for 3, and that's finding that balance there. I don't know about you, Roy.
I think that's great. I would say, actually, the way that James described it, which is the technical analysis is the how the markets moves, and fundamentals is why the markets are moving. I think it's important to realize whatever your currency or whatever instrument you're trading, there's a reason why these things move. Central banks want to go for the highest yielding currency. They want to go where they can put their money at another central bank and earn yield on that currency. So every once in a while, you'll look at a specific country like Japan, for example, and nobody really wants to park their money there because of the negative yields. So then they'll take it somewhere else, like the United States. And so a lot of the time when we're talking about the dollar being a safe haven, you kind of have to understand it's more than just the risk on and risk off, but there's also a reason for why these central banks are moving money around. So right now, as Ken explained, there's an inflation crisis. In an inflation crisis, institutions want to buy assets that are priced in that currency that's being inflated. Because the more of that currency, the more expensive your house is going to be. Who here owns a house that's gone up in the last few years dramatically in price? Dramatically is a relative term, but who here has a house that's gone up in value in the recent years? Is it because you guys added all these crazy things? Maybe you did. But it's not just because you added the new cabinets and the new floors. The value of the currency that the house is being priced in is getting deflated. So there's 2 kinds of inflation. There's currency inflation, asset inflation. I try to understand these themes. So if inflation continues to get worse, we can assume that the Federal Reserve is going to continue to tighten monetary policy. And over the next few meetings, we'll continue to raise rates. Going into this year, the consensus was only 2 interest rate hikes from the Fed. We're already at 5. If we continue to go down this road, there's going to be a massive, I would say, sentiment of fear in the markets. Markets look forward 6 months. If you expect us to go into a recession and you want the Fed to step in and you expect the Fed to start printing money, the closer we get to this recession, you're going to start to see stocks go up. And this is why fundamentals is so difficult to trade, because everyone's like, well, Roy, recession is coming. We see it coming, we should short the markets. The markets are forward-looking by 6 months, and so they're expecting the Federal Reserve to step in with liquidity. And so when there's an announcement and you see the CNBCs and the Bloombergs fear-mongering, but then you see stock markets rising, everyone's confused, it's because the markets are looking ahead. And so this is a little bit of 3D chess if you really want to look at the fundamentals. The easiest thing to do, markets are split up into 3 and 6 month cycles in the year based on central bank policy. Study the central bank of the currency you're trading, and you're going to figure out their incentives and what really drives them to make decisions. Then use your technical analysis to find entries and exits. That's it.
Could I just quickly add something, just quickly? Obviously, Roy has a lot of knowledge there on the fundamental front, so don't as well let it be intimidating by any means. Just as a starting point for everybody on the fundamental journey, what I did was, obviously, as Roy said, study central banks, what's going on, in terms of like the interest rates, their monetary policy decisions. But then also, if you're trading, for example, euro dollar, so get a spreadsheet, right? And have a section for euro, have a section for dollar, have different fields. So the growth of the Eurozone, inflation, unemployment, and basically just input the data. So every time it comes out, you can check like the likes of Forex Factory, input the data points, compare both economies. How's the euro performing versus the dollar? How's the Eurozone performing versus the United States? And then formulate a fundamental view. Have a view of where you believe euro is going to go versus the dollar. And then obviously get in technically. So that's one way you can start getting into fundamentals, by just having a spreadsheet there of those basic macros and just formulating a view.
Can I add something to that? So basically that formulating the view that he's talking about is basically gathering a thesis. And I think a lot of people, when they're looking at fundamental analysis, they're only looking at Forex Factory from consumer price index and economic indicators that are happening. So consumer price index, gross domestic products, all of these things that's coming out. It's very important to also look at the supply and demand perspective of what he's talking about when he's talking about these interest rates and things of that sort. So the central banks, even right now, what's going on is like central banks are trying to get away from the dollar and putting money into US treasuries and stuff like that. So that's another reason why gold is going up right now. So really understanding, like he said, understanding the why behind what's happening in your charts, opposed to just, oh, this is at a level of resistance, so I'm going to sell right now.
I just want to say something really quick. Yeah, obviously fundamentals can be very overwhelming to learn. There's so many different moving parts and pieces of information. What I did personally, just wanted to share my own personal experience. Actually, Ken, I know you used to, I don't know if you still do it, but you used to have just like where you offered your fundamental insights. I don't know, it was like $35 a month or something like that. I used to subscribe to that. That was like 2020 or 2021, a long time ago. But I'm just saying, really audit the information that you're digesting on a daily basis. I went on Forex Factory, and you click on each red folder, and then there's 17 different linked articles, Twitter articles, this, that. I would go on, I would read every comment that people made. Maybe somebody said something smart, or I didn't understand it, or I looked it up. You have to really be immersed in this. There's so much information out here. You need to look at all the information objectively and then figure out your own analysis on it. So just continue to learn,
All the speakers covered perfectly both technicals and fundamentals. But now it's time to jump into psychology. And for psychology, I'm going to move a little bit the questions around without changing them much, don't worry. But the first question that I was going to ask is, what are the potential risks and negative impacts of social media influencers posting as successful traders, and how can retail traders differentiate between genuine expertise and misleading gurus?
I'm ready for this one.
Is everyone ready for the answers, right? Come on.
Listen, there's a lot of deceitful, evil people in this niche that are just straight up lying to you. I'm not gonna name anybody's names, but a lot of the biggest names, it's fake. It's just fake. It's just fake. Listen, the supercars, the Lamborghinis, the Rolexes, the Richard Milles, all this stuff is cool, and aspire for that. But that's not what you should be looking towards. The number one flex in trading is time freedom, location freedom, freedom of your time. That's it. If you don't gotta wake up and answer to somebody, or work a job that you hate, or do something that you don't like to do, that's the ultimate flex in the world, and don't let anybody else say otherwise. Okay? So all this shit is marketing. A lot of this shit is marketing. Okay, yeah, he posts his 17 Lamborghinis every day, and then he posts that he's selling his class, and then he makes $500,000 on the class that you don't even, and then they make 20K. Oh, look, I made 20,000. I'm the best. It's just stupid. It's just stupid, So there's a lot of fake, there's so much shit out there that would literally turn the whole game upside down. But one day it'll all be revealed. But I'm just saying, that's why I said focus on your own steps, because there's people out here that are just that are just deceitful. It's just not true, honestly. And it really bothers me, because everything I've ever put out is completely transparent. I'll show you my Bitcoin fucking blockchain receipts, whatever you want to see, as transparent as I can make it. Because you could edit the MetaTrader, you could say that right now people have partnerships with brokerages and all this stuff, and they have marketing accounts and fake live accounts, and they can go in and say that they went long on Bitcoin in 2017. Like right now, they can enter that trade. So I don't believe anything that anyone puts out there. Like I only focus on me and what I'm doing. You know, like cool, I'm inspired. Cool, you got another Lambo today? Great, bro. Like nice, but it's just irrelevant, and it should all be irrelevant to you. That's why I said follow people that actually provide value. Are you learning something from them, or is it just superficial? Is it just superficial? That's really it.
Big applause for that.
Yeah.
Let's go.
I actually want to touch on one thing that James said, which is it is okay to use things as inspiration. Like if you genuinely do like cars, if you genuinely do want that sort of lifestyle, you can reach for those things. The thing is, I was following the footsteps of people that I thought were doing things the right way, and it turns out that you're reaching for a $200,000 day or $500,000, these crazy numbers.
Right.
The one benefit that it gave me is it made me work harder, because I had so many years where I just was not succeeding, and I'm looking at this as like, is it just me? Am I the only person that can't figure this out? And I realized that I just had a few issues I needed to solve, but James said it best. You have to focus on your own plate. Nothing that somebody else is doing is going to affect you the same way as studying your own results, as studying your own mindset, as working on some of those flaws that you have in your personal life, as cleaning up the pieces in your personal life so you can actually focus on trading. I was one of those analysts that never made money. Like this actually happened is I would always study the markets. I knew every single thing about every news drop, about every market action, and I could not pull a dime out of the markets because it's not just about the system. I couldn't hold a trade because of, well, what if the Central Bank of Japan actually decides to, right? So focus on your own mindset and start to look at your own data. And in your own data, your trading history, all the answers are there. The best course that you guys can buy is looking at the past 30 or 45 trades that you've taken, looking at that sample size and finding the patterns. Every week, you're up 3%. Come Friday, you give it all back. Next week, up 4%. Come Friday, you give it all back. That's a pattern. Imagine if you stopped giving it back.
Let me just say that anything is possible. I don't want to take away from anything that anyone's done, but literally there are no ceilings. Like aspire to become a billionaire. Why not? Like you can't, like there's somebody that made $10 million today in the market without batting an eye. So it's possible, but just understand like that it's going to take a long time, and if you want to do those type of numbers, you're going to have to really risk a lot and give a lot of yourself. You know, the most money, I made $384,000 in one day. That was the biggest day I ever had. And I don't care what anybody says, because I know inside here, like what I had to go through. Like I had to sacrifice days of sleep. I was up for 72 hours straight. Like I'm willing to do whatever it takes. And that's the mentality you have to have. You need to have 1% mentality. Go look around at the 100 people around you right now. Go look around. Are you better than them? Are you more fit? Are you more equipped? Are you more knowledgeable? Are you more resilient? Do you believe in yourself more? All these things, like trading is a battlefield. You know, we're going to war here. Like there's like the market, the opposition of you're on a buy, someone's in a sell, they will vaporize you in 1 second. They'll eat you up in 1 minute flat. Like I was watching an interview with a Navy SEAL, right? And he said out of 100 men that go to the battlefield, 3 to 5 of them are holding their own. About 2 or 3 are doing all the killing, and 90 are just targets. And that's a perfect representation of the market. Don't be a target. Be a fucking savage. Be a killer. When I'm in a trade and I'm in drawdown or I'm just questioning myself, I'm just like, well, what are the 99 other people gonna do? They're gonna get scared. I think about like, I need to be so rigid, and I need to be that 1%.
You know, that's what James was saying. 100% agree with him. I think it's a lot easier to build a business than it is to be a successful trader. That's because, like, if you build a business, you can mess up and recover the next day. But, like, if you really mess up in trading and you do something stupid, you over leverage your account, and all of a sudden you're down 20%, 30%. I'm sure everyone here has blown an account. You don't recover from that. Like, you have to restart. And when you are marketing all these businesses, I mean, you can have a mess up. Next day, it just moves on. You're still making money. So do be careful. But at the same time, like, everyone just wants to be entertained. And really, like, if you want to be a successful trader, you should be looking for the value and not the fugazi.
If I can say something as well, is just to everyone in here, stop trying to bypass the fucking process. Remember, yeah, seriously, for any craft, right? And bear in mind, trading is one of, right up there, the hardest crafts to master on this planet, because it requires us to do so many things that are out of our normal human tendencies, okay? Remember, trading is 4 years. Year 1 is total failure. Year 2, a little bit less failure with some wins. Year 3, there's a bit more of a balance there. We're finding a little bit more consistency. And year 4, here we go now. The trading world is your oyster. So don't be sucked in, just going back to the actual point about social media. You may see some traders, some guys trading 10 lots, 20 lots, whatever. But don't be sucked in by, I need to bypass my process now. Stick to what you're trading, and remember, you need to do those 10,000 hours. Focus on your journey.
People have no problem. People have no problem spending 3, 4, 5, 6, 7, 8 years going to college and $100, $200, $300, whatever, $1,000, right, for tuition. But if you apply the same mentality to trading, it's a problem, right? I'm going to lose $100,000. Like, I'm going to have to. It's going to take 4 years. Like, people, that's the number one question I get asked is, hey, how long did it take you? How long this? You already lost when you ask that question. I say that's the worst question you could possibly ask me. Is like, how long? It's what did I do to get there? How could you do it faster, maybe, is a better question, you know? Don't focus on the time, because when you're focused on time, you already lost, you know? Like, why do you care how long it takes? This is literally freeing yourself from slavery. I would spend the next 20 years if I had to, you know? So, again, apply that mentality. Like, it's gonna cost you money, it's gonna cost you time, it's gonna cost you peace, it's gonna cost you relationships, it's gonna cost you everything, honestly. I lost everything I had. Relationships, people, I isolated myself. I was willing to give up everything. Like, I literally would die for this shit.
Well, at the end of her question where she said, how do you differentiate between gurus and knowing, I think that you should never look at a person. Never look at just what a person is doing or what a person is posting. Somebody could say, I could say whatever I want about myself. It's how many people's lives you've impacted. Like, once you get beyond just the trading, when you're looking for a guru or a person that you want to follow, like, look at how many lives they've impacted, not what they say about themselves. What are other people saying about that person? Because you can't fake that. You know what I'm saying? You can't fake character at all, nor can you fake other people's results. If somebody buys your course and it's trash, they're gonna say, oh, this is the worst course I ever took, so forth and so on. You're not gonna have millionaire students saying, oh, this person changed my life.
One more question to wrap it up. Because we do have great speakers also behind the stage. I think I would like to start with Jessica again with this one. Jessica, if you could look back at the start of your career, is there an advice that you wish someone has given you? And something that you could have saved you time, effort, and headache?
You know, I love my process. So is there anything that could have saved me time and effort, so forth and so on? I honestly don't think I would be the trader I am today if it wasn't for everything that I've gone through. My mom has this saying that she used to tell me when I was younger. Anytime I'll have any adversity face my way or whatever case may be, she'll say, like, you know, if it's a mama butterfly flying by and seeing its caterpillar in a cocoon trying to get out, and it's struggling, the mama butterfly, if it says, oh, I'm gonna cut my baby out of the cocoon so it could be a big, beautiful butterfly, that butterfly is never going to go through the maturation process to become that. If you cut a caterpillar out of a cocoon too soon, it's gonna die. I think that what he said, you can't cheat this process in trading, because even if you go to somebody and say, everybody who first starts out in their trading journey, you've heard psychology is the most important part, period, right? Now, as a trader, when you first start out, you don't understand how important that is. You hear it, but you don't understand it until you go through it. So that process you have to go through, and you have to get to know, I would say you have to know God, because ultimately knowing God is knowing yourself. I think it's a self process that you have to go through in order to be successful in trading, and nobody can give you the cheat code to that at all.
Oh, if you
this
don't
is not
start
a
fucking
library.
clapping like you really fucking mean it, like your life depends on it right now, I need you to clap.
Woo! There we go.